eventually, Chapter 6 not only related to expenses, because if you take a look of Schedule C, item number 13, this big issue there. Okay. You process depreciation, and again, the depreciation rule is different from the financial accounting to the taxation accounting. Different rule. But better off, your business qualified as under 179. Better off, you qualify under 179. Then you can deduct the whole thing, the whole expenses in 1 year, and also in the first year. Okay, so in one sense, Chapter 6 depreciation related to expenses. But the other sense, it will relate to capital gain or capital loss. Understand? For Chapter 6, we will not spend too much time for capital gain. However, this issue will relate to, because when you process or when you calculate, when you do the accounting of depreciation, on one side it related as expenses. You report this for the year, right, as expenses. However, when you report depreciation as an expense, your basis drop. This is a very important accounting concept. So for those of you probably never heard about that before, remember this, okay? Chapter 6, in one side related to annual business expenses, okay? The other side will lead to the other issue is whenever you calculate depreciation, the same amount also dropped from your original basis. So for example, one machine you purchased, is $10,000. So that is the basis, $10,000, right? You use as a business. And again, go back to Jennifer's questions. Doesn't matter you like it or not, you're supposed to do the depreciation every year. So for example, 5 years. So every year you are supposed to deduct $2,000 as expenses. If you forgot it, you lose. You lose $2,000 benefit. And also, your basis dropped from 10,000 to 8,000. You got it? Right, related to. Let me complete it, okay? Then you say what big deal? It's big deal. Because, say, 3 years after you use this machine, 3 years after, the market value for some reason, it went out, not dropped. Because, this machine becomes, valuable for any reason. So after 3 years, you sold it at 15,000. Okay, it just happened this way. So your 15,000, you sold, you received the money. How much gain you have? It's 15,000 minus 4,000. Because every year your cost basis drop by 2,000. So after 3 years, doesn't matter you like it or not. Doesn't matter you report tax or not. Doesn't matter your basis drop from 10,000, 3 times of 2,000. So you drop from 10 to 4 because you deduct 6,000 already. Doesn't matter you like it or not, even though you forgot. But your basis dropped to 4,000. So when you sold any amount, say 15,000, you incur the gain. 15,000 deduct 4,000, 11,000 gain. You got it? I hope I did not confuse you. So Chapter 6 is very important. We don't have a very, detailed, opportunity to discuss this issue. But Chapter 6 is very important because it's more like a bridge. In one side, depreciation related to your annual expenses. Doesn't matter you like it or not. Doesn't matter you deduct or not. It's been there. The other issue, this depreciation lead to the basis. So whenever you dispose means you sold, then you need to calculate whether or not you have capital gain or capital loss. Because each year when you calculate your depreciation, you affect the basis. Usually the basis drop, the same amount you report as expenses. Okay, so chapter 6 is kind of like a bridge. You can link two issues. So let me go back to your questions.
I think I just want to have a comment whether everything, if depreciable, they all come, no matter whether you report or not, they all come, I mean, the base value goes down annually. Is that
Okay, let me go back to the fundamental issue. What kind of item need to be depreciated?
car?
Yeah, let me go back to this issue. Okay. Of course, as a small business, you don't need to worry about that. As a small business, as long as we are qualified under 179, we go ahead deduct it right away. However, if we want to discuss what kind of item need to be depreciated, the answer is if this assets, this item, could be used more than 1 year. Understand? So that's the difference between the office supplies. Office supplies usually mean the life is kind of short, like a toner, battery, toner, this kind of thing, is under office supplies, because if the life is shorter than 1 year, you don't bother it. When we talk about, so that's a very basic issue. What is the tax years? Tax years is 12 months period. Doesn't matter what day is ended. You have a 12 months period. Your business expenses incur during this period. So printing paper, battery, light bulb, if the life shorter than 12 months, you just go ahead. You don't need to bother 179 at all. As long as this is called supplies, no depreciation. If no depreciation, you don't bother 179. You don't need to bother. Okay? So go back to his fundamental issue. What kind of item need to get depreciated? Only the assets, the life more than a year. So anything more than a year, subject to. So we have 3 years, we have 5 years, we have 7 years. We will see it. Okay. They are all regulated by the tax law.
It can use
Yes.
forever.
Well, furniture usually is 5 years. We will see it. Usually. Oh, by the way, we are talking about for business, okay?
Yeah.
For your personal, forget that. Okay, for personal, no need.
Furniture.
Yeah, we talk about but however, for medical, sometimes it's called equipment. Sometimes it's called furniture. This is a gray area. For equipment, it's longer. Okay, as a small business, you want to number one qualify as a 179 because you can deduct it right away. If you must depreciate, you hope this item is under the short-term life, right?
What about people that buy expensive art, like painting and hang on the office?
Good questions. Okay, let me give you one example. Okay, say I'm running my medical office. I'm a doctor. I'm a medical doctor. So if I purchase, my business equipment, no problem, right? Business furniture, no problem. However, I just make too much money last year or this year. I know I make too much money this year. So I just spent $200,000 purchase a paint. Very valuable, very expensive artwork, and put it in my office. What happened? Everybody, your answer. You got clear my story? Hey, by the way, this is a tax planning, right? We talk about tax planning. I know this year I will make, say, multiple $1 million income already. So, I need to purchase something for deduction. So, but however, for this year, I don't need furniture, I don't need equipment, I don't need this, I don't need that. But tax planning, how about I spend, say, $200,000 to purchase art and leave it just hanging out on my wall? The answer? Your answer?
No necessary.
No.
Right. Ordinary necessary. Come back to the bottom line. Come back. So IRS will come in and say, no, this is not ordinary. This is not necessary. Then you say, okay, let me change my scenario. I'm not a medical doctor. Right now, I'm a gallery.
Yes.
I'm art dealer. I'm gallery. What happened? I changed my story. I'm not medical. I'm just gallery. My business is this.
But do you have to be 100% or you can just invest a second business?
Doesn't matter. So I just think if you spend $200,000 on art,
Business
the answer is still no, okay? Because if you change your story as become a gallery, you become a dealer. And become a dealer, this item become your inventory. Inventory can never be deducted. This is your merchandise. Understand? Understand? So even worse, because inventory never can be depreciated. Nobody can depreciate your inventory. Inventory is a merchandise.
Yeah, you can write off your inventory.
Unless one day this inventory totally become worthless. Nobody gonna buy it on the market. But this is a very, very...
So the 2,000 painting cannot deduct at all?
No.
But yeah, ordinary, necessary. But if the, if the doctor office, he is like a high-end,
Yeah, you can argue.
you can,
Yeah. My client is Hollywood, superstar. I'm just, plastic surgery. Yeah, I'm a plastic surgery, right? Surgeon. And my client is always Hollywood superstar. And I have to have my office decorate up to a certain level. Otherwise, I cannot maintain this type, patient. Yes, I can argue. But for any other medical office, probably is pretty tough to argue, say, $200,000.
What about the fish tank? Most of medical office have a fish tank, big one.
Yeah, that's ordinary. So fish tank becomes, ordinary property.
But if the painting instead 2,000 become 200, that
Oh
is
yes,
no problem.
yes. Right now you see the difference, right? So for any kind of $20, yeah, of course, it becomes a office expense, decoration, right? A flower, say a flower bouquet. So you just have a fresh flower bouquet. Say once a week, you spend $20 per week, to have the flower. Here's office expenses. It's fine. So ordinary necessary is always, but 200,000, I don't know. Probably become your assets, I would say. More likely become your assets. Anyway, let me finish this, okay, very quick, okay. So as I said, we don't have time to cover everything here, but very complicated on my page 212. That is under the section MACRS, Macres. This is a modified depreciation method. You can see 5 years, 7 years, 27, 39. Very complicated. We don't have time to cover everything. So I just leave this to you. But I do have one topic, okay? See, anybody want to adopt it? That is comparison between the cost FIFO versus LIFO. FIFO means first in, first out. Eventually we learn this in my financial accounting also. LIFO means last in, first